I told you that China has just set off a financial chain reaction capable of shaking America's global dominance. Sounds dramatic, right? It should. This isn't just another economic shift. It's a deliberate and strategic move that could redefine the landscape of global finance. Imagine this. The largest holder of US debt, the very entity enabling Uncle Sam's borrowing spree, decides to step back, not subtly, but with purpose. China has already shed 44% of its US Treasury holdings, and now Japan is following suit. So, what happens to the once mighty US economy when its financial foundation begins to crack? And perhaps more critically, how will it impact the rest of us when the balance of global financial power starts tilting toward the east? Let's dive in. China's decision to offload US Treasury bonds isn't just a minor event. It's a major shift in global financial dynamics. Over the past few years, Beijing has quietly reduced its holdings, signaling waning confidence in America's fiscal policies. But why such a dramatic move, and why now? To understand the magnitude of this decision, you need to recognize the pivotal role US Treasuries play in the global economy. These bonds are the backbone of America's financial dominance, serving as the world's go-to safe investment for decades. For years, China has funneled its trade surpluses into these bonds, essentially financing the US government. Now, that once stable relationship is unraveling, and the implications are far-reaching. This isn't just a story about financial markets. It's about power, trust, and the shifting balance of influence between two global superpowers. So why is China choosing to disrupt the status quo? Let's explore the implications of this sell-off. US Treasuries have long been seen as the safest investment globally, the financial equivalent of a secure rainy day fund. For decades, China stockpiled these bonds, using them as a repository for its massive trade surpluses with the US. However, it seems that era is coming to an end. Why is China making this move? First, it's a defensive strategy. US Treasury bonds link Beijing's economic stability to Washington's fiscal health, a dependency China no longer finds acceptable. With the US government battling record deficits and inflation, holding onto these bonds feels like sitting on a financial time bomb. Second, it's a calculated geopolitical statement. By selling off treasuries, China is sending a clear message. It's done playing the role of America's chief creditor. The 2008 financial crisis demonstrated how crucial foreign investment in US bonds was to stabilizing the global economy. By offloading its holdings, China is effectively saying, we won't be there to bail you out next time. But there's more to the story. China's move isn't just about stepping away from US debt, it's also about where it's heading. Beijing is diversifying its reserves, increasing investments in gold, and strengthening financial ties within BRICS to build an economic ecosystem that doesn't rely on the US dollar. This is no impulsive decision. It's a long-term strategy aimed at reducing dependence on America's economic dominance. Here's the game changer. Japan, another major holder of US debt, is following China's lead. Together, these two economic powerhouses are reshaping the global financial landscape. What does this mean for the dollar's dominance? For decades, the US dollar has been the undisputed king of global finance, the currency of international trade, the backbone of foreign reserves, and the ultimate safe haven during crises. But no king reigns forever. History tells us that every dominant currency eventually falls. Could the dollar be next? China's sell-off of US Treasuries is about more than economics. It's a deliberate move to chip away at the dollar's grip on global finance. By reducing its dependence on the greenback, China is laying the groundwork for a multipolar financial system, and it's not acting alone. Since 2014, Russia has been diversifying its reserves, steering away from dollar-denominated assets. Even smaller nations are exploring alternatives, opting to trade in local currencies or rely on gold. Why does this shift matter? The dollar's dominance isn't just about convenience, it's about power. The US has long wielded its currency as a geopolitical tool, imposing sanctions and influencing global markets. a weakening dollar could mark a seismic shift in the balance of global influence. If the world shifts away from the dollar, America loses one of its most powerful foreign policy tools. However, dethroning the dollar is no small task. It remains the most trusted and liquid currency globally. Alternatives like the euro or the yuan have made some headway, but they lack the widespread trust and infrastructure the dollar commands. That said, cracks are beginning to show. As more nations diversify their reserves and explore alternatives, the dollar's grip weakens. This isn't just a theoretical concern, it's already happening. BRICS nations are actively discussing a unified trading currency, and cryptocurrencies are gaining momentum as decentralized financial options. While the dollar isn't vanishing overnight, the foundations of its dominance are undeniably starting to shake. So what else is China doing? China's sell-off of US Treasuries isn't just about managing economic risk. It's a calculated move in a larger geopolitical strategy. By reducing its dependence on the US financial system, Beijing is positioning itself as a key player in a new multipolar world order. What does this look like in action? The Belt and Road Initiative, BRI, provides a clear example. Through this massive infrastructure program, China is pouring billions into constructing roads, ports, and railways across Asia, Africa, and Latin America. But this initiative is about more than just building physical connections. It's about extending influence. Every country that joins the BRI becomes part of a network that relies less on Western financial systems and more on China's expanding economic power. This shift underscores Beijing's ambition to reshape global financial and political dynamics in its favor. Then there's BRICS, a coalition of emerging economies challenging Western dominance. These nations are working together to develop alternatives to the dollar, exploring the creation of a unified trading currency and boosting trade in their local currencies. If successful, this could shift the center of global trade away from the US toward a more decentralized system. Perhaps the most revealing move is China's growing investment in gold. Unlike fiat currencies, gold is not tied to any single country's economy, making it a reliable haven in times of instability. By expanding its gold reserves, China is signaling its intent to reduce reliance on the dollar and build a more stable, independent financial system. Meanwhile, the US appears stuck in the past, relying on the dollar's historical dominance instead of adapting to the evolving realities of global finance. This raises a critical question. What happens if the US fails to keep pace? The answer could redefine the global economic landscape. For decades, the US economy has been a heavyweight champion, resilient, adaptable, and seemingly invincible. But can it withstand the mounting pressure from this shifting financial order? Now, if you like this video, check out this next video right here.